One more set of numbers that came out yesterday was Repro India. The revenues did very well. Bottom line jumped or more than doubled. The only sour spot, if at all, would have been the operating profit margins, which have come off a little bit from the highs that they had in the previous corresponding quarter last year. But it's important to touch base with the management to try and figure out what the outlook ahead for the year could be like. Pramod Khera, Executive Director at Repro India, joins us for that. Good having you, Mr. Khera. Thanks so much for joining in.
Thank you.
Revenue numbers seem reasonably strong, 38 odd crores. What's the breakup here? And what the better margin books, the higher chunk of this 98 crores?
Yeah, so 98 crores, the print, our traditional print business is around 70 crores, 69 to 70 crores. And the balance is the new Repro Books on Demand, which is around 28 crores.
Okay.
So that's the split between the two businesses now.
Okay. I know that the share of the books on demand will go up, but the traditional business, if you've clocked in 70 crores in Q1, I remember the last time you had said that you plan to keep it at about 200 to 250. Does it stay around those levels as well?
Yeah, that's right. It will stay around those levels.
Okay, so you can safely extrapolate this 70 for the next 3 quarters. So between 220 to 250 odd crores for the traditional business.
That's right.
Okay. Before I come to books on demand, and there's a slightly longer conversation, what led to this margins, operating profit, just core operating profit margins coming off a bit from 14% to 11%? Because I would believe that books on demand would be a higher margin business, and if that share is moving up, then your margins automatically would move up.
Books on demand currently is not a very high profit business because we are investing in growth. And as we are growing, we're taking on more and more of market share. So the focus right now is not the bottom line, but the top line on the books on demand. Having said that, our traditional print business, also the mix that we had last quarter between exports and domestic was higher than exports. And the exports typically give higher margins. Also because of the hardening of the paper prices, which typically we are able to pass it on to the customers. However, there's a lag of a quarter or so. So this should get corrected in the next quarter.
So from 10.9 odd percent, you believe you could move up to normalcy, which would be about 13 odd percent?
Yeah, between 12 to 15%.
12 to 15 odd percent. Okay. The bottom line numbers seem impressive. What's led to this? I mean, has there been some other income component or otherwise? Because there's a 38% growth in revenues, but the bottom line number has jumped to more than 100%, right? You've doubled or more than doubled bottom line. What's led to this?
So one is the deferred tax.
Okay.
So we had some accumulated losses, and because of which we had got the benefit of deferred tax. Even otherwise, if you look at the PBT also, there's a good growth, and this is a continuation of the cost control that we are doing, and that is resulting in better margins.
Okay. Books on demand, you believe, I think if I do the math, about 27 odd crores this quarter?
Yeah, it's
70 and 27.
Yeah, there's a split between digital printing and books on demand. Books on demand would be around 20 to 23 crores.
Okay.
And balance 4 odd crores is digital printing in RKCL, which is a 100% subsidiary in which we do this business.
Okay, digital printing is
where we're doing short runs for publishers, maybe 10 copies, 20 copies if they want, then they outsource it to us for printing.
Okay, and what's the run rate they're looking like? What did you do for books on demand as a core business, say any of the last previous quarters? And if you've done 22 crores right now, is it an increasing trend?
It definitely is an increasing trend in the sense that if you look at the month of July, which we just ended day before yesterday, we clocked a run rate of 9 crores in that month.
Only for books on demand?
Only for books on demand, which was around 7 crores in April, 3 months back. And for 7 crores, we are doing around 7,000 books, 7,500 books per day. Now we are doing close to maybe over 9,000 books per day.
Interesting. Okay. So let's say I extrapolate this 9 crores for the next 2 months as well, safe assumption. So you do about 27 crores in the quarter of July, August, September. You've done about 22 in the quarter gone by, which makes it about 50 crores for the first half. Add to that maybe 10-20%, you do about 120 odd crores, 120 odd crores for the year. Is that a safe assumption?
It should be better than that.
Better than that?
Yep.
And therefore, my question though, Mr. Khera, would be that let's assume you notch the 150 crore mark for the year, optimistic or realistic as the case may be. Would you be on track for your 2021 target of 10% of the online book market, which would be about 8,000 crores and therefore 800 crores from books on demand?
Well,
or have those numbers been revised a bit because of the industry growth rates?
No, see, if you look at the number of books being sold today, they are close to 1.2 to 1.25 lakhs. And we are doing 9,000 books per day. I'm talking about per day, right? So which gives us a market share of around 7 to 8%.
Okay.
And while the market itself is growing, we are also growing. And as I had explained in my previous meeting with you over here, we are expanding the capacity in Mumbai. Plus, we are adding units in Bangalore and in Delhi. So that will give us a boost in terms of the top line.